Welcome to the weekly market recap with Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Sri Lanka's construction industry has continued its recovery momentum, posting an 8.5% growth in the April to June quarter of 2025 compared with the same period a year earlier. Although slightly slower than the 10.7% growth recorded in the first quarter, the latest expansion pushed overall growth in the first half of this year to a solid 9.6%. This is nearly twice the pace of the country's overall economy, which grew 4.8% during the same period. Analysts point out that strong performance highlights the sector's critical role in supporting Sri Lanka's broader economic recovery. The industry had endured 6 consecutive quarters of contraction from mid-2022, when the economic crisis forced both public and private projects to halt. Shortage of materials, runaway inflation, funding constraints, and a workforce exodus all contributed to the slump. Today, conditions have improved. Industry players note that more large-scale projects are now underway, particularly in road infrastructure, signaling that government expenditure is beginning to translate into visible activity. The government has allocated 1.3 trillion rupees for public spending this year, the largest ever budgetary provision. But progress on actual project execution remains slow, with calls from the industry for faster implementation. Central Bank Governor Dr. Nandalal Veerasinghe recently stressed that the sector cannot rely only on state-funded projects, pointing instead to the need for broader private sector participation. Meanwhile, a key development this week was the launch of the Kadawatha to Mirigama section of the Central Expressway. President Anurakumara Dissanayake inaugurated construction with completion targeted for mid-2028. As of June this year, construction contributed 7.2% to Sri Lanka's total economy. When combined with real estate activities, the share rose to 11.7%, underscoring the sector's weight in national growth. Sri Lanka is now entering a period of sustained economic growth after years of crisis. This is according to Asia Frontier Capital, which says political stability, economic reforms, and attractive market valuations are driving investor confidence. The AFC fund manager explained that the outlook is supported by a combination of steady GDP growth, strong tourism recovery, and improving investor sentiment. According to his analysis, Sri Lanka's economy grew 5% in 2024, followed by 4.8% in the first quarter of this year and 4.9% in the second quarter. Growth has been led by consumption, infrastructure spending, and tourism. He also highlighted how the Colombo Stock Exchange has surged almost 200% in US dollar terms since early 2023. Further, he said that this rally reflects renewed confidence following the 2024 elections. The central bank was credited for stabilizing the economy with tough measures in 2022, while the IMF program in 2023 further boosted market confidence. Lower inflation and falling interest rates later helped sustain growth momentum. Tourism is another bright spot, with arrivals in 2025 expected to top 2.5 million, surpassing pre-pandemic levels. Worker remittances have also picked up as the rupee stabilized. Looking ahead, the AFC fund manager pointed to opportunities in tourism and logistics. He said Sri Lanka should strengthen its infrastructure, particularly the port of Colombo, to become a bigger player in South Asian trade. He also stressed that the country could benefit from India's rapid growth, much like Southeast Asian nations once leveraged China's expansion. While acknowledging global uncertainties, he argued that Sri Lanka's growth story is largely domestic-driven, with only 3% of GDP linked to US exports, and concluded that Sri Lanka has overcome many challenges and is now positioned for stable growth. Sri Lanka's 2026 budget will place strong emphasis on infrastructure development and attracting new investments. This was highlighted by Minister of Labour and Deputy Minister of Economic Development Dr. Anil Jayantha. He explained that while the 2025 budget focused on stabilizing the economy, the next step is to build on that stability and channel resources into long-term growth. According to the minister, the government intends to invest in critical infrastructure, including roads, ports, harbors, airports, transport system, and communication networks. He said that these projects will not only modernize the economy, but also encourage the private sector participation. Capital expenditure, he noted, is being directed towards technology upgrades and infrastructure improvements. The goal is to create a strong foundation that supports sectors such as agriculture, tourism, value-added manufacturing, exports, and small and medium enterprises. The minister added that this approach is designed to create a favorable environment for investors, while also safeguarding their interests through new laws and regulations. Meanwhile, Parliament has set the timeline for the 2026 budget process. The first reading of the appropriation bill is scheduled for September 26th. The Asian Development Bank has announced plans to provide Sri Lanka with $790 million in new loans this year, along with an additional $6.9 million grant. The funding is still subject to board approval and the government meeting required policy conditions. According to the breakdown, $370 million will go towards policy-based loans that support budget financing. These include programs for financial sector stability, power sector reforms, and macroeconomic resilience and sustainable tourism development. In addition, $420 million has been earmarked for investment projects. This covers $200 million for agriculture and irrigation, $100 million for health, $90 million for transport and roads, and $30 million for tourism development. The ADB said these initiatives are aligned with reforms tied to the IMF's extended fund facility, particularly in areas such as finance, public sector management, and energy. Other programs, like those in tourism and water, aim to strengthen transparency, governance, and competitiveness in the long run. The government, together with the IMF, expects to receive about $2 billion in total budget support from development partners during the 2023 to 2027 period. The ADB confirmed it will continue offering policy-based loans to Sri Lanka at least until the IMF program concludes in 2027. Let's take a look at this week's Treasury Bill auction results. With the recent Treasury Bill auction, the 91-day T-bill rate stands at 7.57%, down by 1 basis point, and the 182-day T-bill rate stands at 7.89%, and the 1-year T-bill rate stands at 8.02%, showing no change compared to the previous week. Thank you for watching. We'll be back next week.